Alright, so first things first then, let's put the spotlight then on erstwhile Urban Clap, which I'm sure all of us have used at some point in time to call a service for plumbing, carpentry or any home-related services like grooming as well. It's now Urban Company, which was actually started off by engineering batchmates and has services ranging from grooming to plumbing. It catapulted into a unicorn status and now has gone ahead and entered the home solutions product category. Joining in on the show then right now, we have with us Abhiraj Singh Bhal. He's the CEO and co-founder at Urban Company. Abhiraj, thanks so much for taking time out and joining in. Good to have you on board on Startup Central. I want to start up then by talking about your foray into the consumer product segment. This is with RO water purifiers. What really prompted this thought?
Thank you very much for having me. We've been a home services company for the last 8 to 9 years, and an important service category that we offer consumers is water purifier repair and servicing. We've been doing that for about 7 years now, and over the last 7 years we have repaired and serviced over 1 million ROs. And one of the pain points that our consumers often told us was that why is it that water purifiers need constant servicing and filter changes every few months. And this pain point was something that we heard recurringly from consumers, and we felt that there should be something we should do about it. So about 3 years back, we started to go deeper into the category with the intent of building our own water purifier devices. And we tried and tested with a small group of about 5,000 consumers, understood the science and the R&D behind it a lot better. And eventually we've come up with the native M1 and M2. This, in our view, is a state-of-the-art new gen water purifier. It needs absolutely no servicing for 2 years. And even after 2 years, every time you get it serviced, you're good for another 2 years. We've been able to do this because we use best-in-class filters. We have a 10-stage filtration process. We've also innovated on something called the rapid reverse rinse, which means that the water cycle goes backwards every few hours and flushes out any dislodged impurities. And the overall device is very sleek. It's very modern in its look. The M2, which is one of the two devices, is a smart water purifier. So it's fully integrated into the Urban Company app, and you can track your water quality, the total water consumption, and the life of all filters. So in some sense, we put the power back into the hands of the consumer. Also, in the rare event that anything goes wrong with your water purifier, you are notified on the app, and Urban Company is notified at the back end, and we automatically trigger a service request. To back our claims, we have a zero-cost, unconditional 2-year warranty that both the devices come with. This is absolutely zero cost to the end consumer. It covers every single part of the device, including all the filters, all the spare parts, membranes, etc. So we're very, very confident that this device is hopefully a winning product. We've put a lot of love, heart, and soul into making it. We hope that consumers will like it. It's fully made in India, another thing that we're very proud of as well. And we launched it yesterday, and we're looking forward to how consumers receive it.
Right. So, if we talk about the pricing, because I understand that's one of the areas where the company is quite competitive, you're allowing customers to save up to 18,000 rupees in servicing costs every year. Tell us more details on the pricing.
So you're right, there are a lot of players in the water purification space, and there are a lot of products, but we don't think there's any product that is quite like the native M1 and M2. Most traditional water purifiers will need servicing and filter change every 6 to 9 months, or at least once a year. While the native M1 and M2 both, we give an assurance of 2 years pure clean drinking water without any service needs. And we back that claim with the unconditional warranty that I spoke about. And as I mentioned, after 2 years, when you get it serviced, you're good for another 2 years. So the warranty automatically renews for another 2 years. So I think that's a hallmark feature And it's a disruptive feature because, as you know, the industry operates on a razor blade model. So the industry incentives of the industry are aligned for more service. Most of the OEMs earn meaningful and significant revenues through servicing. And as a result, most, if not all, water purifiers that have traditionally been out there need continuous servicing and filter changes. So that, I think, is a true differentiator of the native M1 and M2. This is also India's first smart water purifier, which is fully integrated into the Urban Company app, so you can track all the features, and that's the other aspect of it, which differentiates it. It's priced quite competitively. The M2 is priced at 17,500, and the M1 at 13,500. And if you look at the total ownership cost over the next 8 to 10 years of using the water purifier, because you don't need servicing every few months or every year, you only need it once in 2 years. The actual cost of ownership over the life cycle is about half of any traditional water purifier. So the incoming price is very competitive compared to similar water purifiers which have similar kind of filters. But also because it needs low serviceability, the lifetime ownership cost dramatically comes down for the end consumer.
So Abhiraj, let's talk financials. You ended FY23 with a consolidated revenue of about 637 crore rupees. That was up about 45% from the previous year. The India business broke even as well on an adjusted EBITDA basis in Q1 of FY24. Tell us a little bit more about your financial metrics, your plans to continue to remain profitable, and your revenue run rate.
So if you see the category of home services, which we've been operating in for the last few years, it's a fairly unorganized and offline category even today. While Urban Company has about 50,000 service professionals that work with us, and we serve millions of consumers every year, in the offline world, you will actually have millions of service professionals and tens of millions of customers using services. So we're still scratching the surface for the home services opportunity in India. We've only recently started to expand into tier 2 cities, and that's been as recent as post-COVID. So up until COVID, we were largely a metro phenomenon. And if you look at our share of the overall offline market, even though we are the market leaders in the online organized category, our share of the offline market won't be more than mid-single digits. So we think we have several years, if not decades, of high-quality growth in the tank. Our focus is on high-quality services at home. It's on constantly innovating and launching newer services which can address consumer pain points, as well as home solutions which go slightly beyond the service, and that could be a foray into products like the native water purifier that I spoke about. Our goal will also be to continue to grow with profitability, as you rightly mentioned. India business, which is our major business, 90% of our revenues come from India, achieved break-even in the first quarter of this financial year, FY24. We would like to operate India at near break-even for some time before it starts to generate meaningful cash flows going forward. The business is very healthy margin structure, so it's inherently a business that can become very profitable at scale, and we want to continue to invest in that scale, continue to make sure that we are innovating for end consumers and growing with innovation. But at the same time, it's also very important for us to grow sustainably, which means grow while keeping the consumer experience very top-notch, while making sure that our partner ecosystem is well taken care of. We have strong principles of governance, and very importantly, we are growing with improving profitability.
Right now, Abhiraj, when we look at the operational metrics, we have seen that year after year, the losses have only mounted. So what's the projection that you have now when it comes to your margin picture? Because do you think you'll be able to rein in your costs in order to help your margins improve?
I won't be able to get into the specifics of the margins and the projections, but what I can say is that at a high level, the business is, at both a gross margin and a contribution margin, very healthy. And one of the reasons for that is that we choose not to compete purely on price. We are one of the rare e-commerce companies that wants to compete on quality of experiences, on service quality, and as a result, you will not see too many discounts on our platform. You will not see a very price competitive strategy that we adopt. We want our users to choose us because they like us, they like the convenience and the quality of the platform. And that has meant that we've been able to satisfy the needs of the users while also making sure the earnings for our service professionals are top notch. And the company also has very healthy gross and contribution margins, eventually leading to a profitable growth trajectory.
In terms of the revenue split, the operating revenue from service commissions and fees during the year has seen a smart jump of about 43%. How much does that contribute? How much will it continue to grow? What is the outlook then from your B2B product offerings?
So far, services is our major mainstay of revenues. About 80% of our revenues come from service commissions and fee. And this is really the take rate or the commission that we keep on every order. The actual net transaction value is substantially higher, about 4 times higher than the service commissions and fee that we retain. The rest of it is transferred, as you know, to the service professionals. That's still the major bread and butter of our business, and we expect that to be the case going forward as well. It's about 80% of our operating revenues today, and we expect it to continue to grow in a very healthy fashion, given how early we are in terms of market penetration and market share. So I think that will continue to be a major stay of our business. For the remaining 20%, which is products, almost all of it today is B2B product sales, which is products that are used within the service that we sell to our service professionals. So this could be beauty kits, manicure and pedicure kits, or cleaning material, or spare parts, etc. That's most of the product revenue. Of course, with our foray into the native water purifiers, we expect product revenues to also grow faster with the B2C line of products now emerging within the company.
Now, you've gone on record to say that you definitely want to go public. It's just a function of internal readiness. So do you think you're ready right now? What's the timeline in place for the IPO?
I think for us, we take the responsibility of being a public company very seriously. I think you are taking retail investors' money when you become a public company. So it's very important to be fully ready and prepared to be a public company, which means strong principles of governance, high quality controls, etc., and also continued growth and profitability of the company. We've been working on this for a while. Last year, as you might know, we onboarded 3 independent directors to the board. We've strengthened our governance and our internal controls and processes significantly, and we continue to do that. I think we still like to believe that we have some work to be done in terms of these areas and other areas of our business. We'd also like the business to be a little more mature, both in terms of top line scale as well as profitability. It's definitely a strong intent that we have to be a publicly listed company. Hard to put a very specific timeline, but I'd say sometime in the medium term future, that's an aspiration.
So last you had raised funds in the year 2021, and that's when you attained that unicorn status. Any future fundraising plans, and walk us through how much you've raised so far?
Very, very, very well capitalized right now as a company. We have more than 1,300 crores in the bank, which is roughly $160 million. We have very little burn as a company. India business, as I mentioned, is at or near break even. So that doesn't consume much cash and won't consume much cash going forward. Most of our investments are in the 3 overseas markets that we are present in, UAE, Singapore, and the Kingdom of Saudi Arabia. Those are early markets, and they will take some time to break even. So most of our investments go in there. But as a whole, just given the low burn and improving profitability profile, we actually have more than enough capital for perpetuity. So we don't expect to raise any primary capital now or in the near to medium future.
So any details, Abhiraj, in terms of what the overall valuations are?
Well, we haven't done a valuation exercise in the last 2 years. The last round of transaction happened only 2 years back. So I can of course tell you what that was. It's in the public domain. When we last raised in 2021, we were valued at a little over 2 billion. But there has been no financing round that has happened in the last 2 years. And I think the valuation of the company will now only be determined either if there is a financing round, which could be a secondary transaction between existing investors and incoming investors sometime in the future, or eventually when we go public.
What about the outlook on the ONDC platform? Have you joined the platform, and what is the outlook in terms of, the synergies working together?
We're definitely in touch with the ONDC team. We are quite supportive of the initiative. We think it has the ONDC protocols have the potential to be for commerce in India what UPI was for payments. So I think it's a very promising set of infrastructure and rails that the government is putting down. We're in touch with the team. We're in early conversations with them to see how we can work with them, and overall we're fairly supportive of the ONDC program.
So currently the company operates in about 53 cities. Tell us a little bit more about your expansion plans, even your global expansion plans. Do you have any?
You're right. In India, we are currently in 53 cities, and most of these cities have been launched post-COVID. So we are in about 40 plus tier 2 cities, if I exclude the top 10 metropolitan cities. And we've seen very, very positive reception, even in this short period of time, from these 40 plus tier 2 cities. So we're quite excited by the tier 2 city potential of India. I think we will constantly add more tier 2 cities, but also do justice to the existing tier 2 cities that we are in, because we will not have at this point in time the full plethora of services that, let's say, a Delhi, Bangalore, or Mumbai enjoys in a Coimbatore or a Bhopal. So I think the idea is to penetrate deeper in our existing tier 2 cities and also launch more tier 2 cities. I see no reason why urban companies shouldn't be present in 100, 150 or 200 tier 2 cities over time. And I don't mean immediately, but perhaps over the next 5 years. So I think India's potential is huge, and tier 2 cities will be a strong engine of that potential. In terms of overseas markets, we are sharply focused right now on the 3 overseas markets that we are present in: UAE, Singapore, and the Kingdom of Saudi Arabia, which is the most recent entry for us. So we will continue to just focus on these 3 markets for now. No new countries for launch at this point in time.
And finally, you have said that in order to drive profitability in a high-margin business such as home services, building scale is important. Can you elaborate?
Yes, so fundamentally, a lot of our costs have a very fixed cost nature to it, whether that is the technology investments we make, and we have a fairly sizable technology team. Out of the 1,000 plus full-time employees at Urban Company, over 300 are a part of our product, tech, design, and data science team. And that's a very sizable investment. Whether it's our training infrastructure that we invest in, it's little known, but we run one of the largest training infrastructures in the country. We have over 250 training centers and an in-house team of nearly 300 trainers. And we train every single professional who joins the platform from scratch. And many of these professionals also have no prior background in the trade. So they undergo what is known as intensive fresher training programs. Similarly on marketing, where we spend in brand marketing, etc. So a lot of the costs in our business are fixed in nature. These are forward investments that we have to make to deliver high quality consumer experiences. And as the platform scales, because we have a very high quality contribution margin structure, the incremental scale generally starts to flow very nicely into the bottom line. We've been seeing for the last 2 years, and this is evident from our India financials that we have declared. When you look at the incremental revenues that the company has added and how they have translated into bottom line, about 60 to 65 paisa to the rupee has flown to the bottom line in the last couple of years. So that's essentially the nature of our business. It's a classical consumer internet business where you forward invest and as you scale, you break even and eventually start generating meaningful cash flows, and that's what we intend to do.
Okay, Abhiraj, before I let you go, got some quick fire questions. We usually, sort of volley these to our unicorn founders and co-founders. So let's get to know you a little bit better. Tell me, what is your productivity hack?
Wake up in the morning at 5 a.m. and hit the gym first thing in the morning. I think it just sets up the day for success.
All right, so you're the health freak. Any regrets? Do you have any?
I don't have any major regrets. I think life has been kind, and I'm very grateful for how things have played out. Of course, we have made many mistakes and we could have learned, and we do learn from the past, but no major regrets as such.
What would be your advice then to the next gen?
Startup. There's no better time to start up than now. India is a huge opportunity. It's going to grow multifold in the next several decades. Lots of new companies which haven't even started today will eventually go on to become publicly listed Sensex 50, Nifty 50 companies. So I think it's a great time to be a builder in India, and I would encourage young watchers of your show to take risks and go out there and start a company.
Okay, so India is where all the opportunities are at. And is there any next big breakthrough that you see in the startup world?
I'm not sure that I'm fully qualified to answer that question, but I think we haven't really seen any major new consumer internet marketplaces that have emerged in the last year or two. And I think there are multiple opportunities within consumer internet marketplaces in several categories, many of which might seem to be fully solved, but they're not necessarily fully solved. So I would also encourage entrepreneurs to look at consumer internet marketplaces.
And who is the coolest person that you follow on social media?
The coolest person that I follow on social media has to be my co-founder Varun. I think he's Captain Cool at all points in time. I've actually known him for nearly 20 years now, 19 to be precise, and I haven't seen him lose his cool even once in these 19 years. So he's definitely Captain Cool, and in many ways a role model for me.
Well, good to know that you're lucky to be working with him. Okay, Abhiraj, it's been a pleasure. Thank you so much for taking time out and joining in on Startup Central.
Thank you so much. Thanks a lot.